But at least you've got some green back on the Nifty. But going back to the insurance space, I think that's the big, hotbed where there's still a debate and discussion on what happens. Is it net positive for companies or not? Well, let's get Yash back in. I think we've got Yash with us. Yeah, Yash has been talking to, of course, a lot of the players since morning, looking at some clarifications that came in from New Delhi as well. Yash, what's the verdict as of now? No ITC at all. So what happens? Positive, negative?
Well, as far as the verdict on the premise itself is concerned, 4 important headlines. GST on individual life and health insurance exempted. GST exempted on the reinsurance cost. And to the point that you made in terms of clarifications, which also came in. But what we had reported earlier, before the clarifications even came in, is that inverted duty structure, the benefits of it won't come to life insurance companies or health insurance companies. Also, the second part, input tax credit benefits won't come as far as life and general insurance companies is concerned, because the category of exempt does not have the provision of input tax credit itself. Now, let's look at the policyholder point of view. How much can the insurance policies get cheaper for the policyholder? Well, health insurance, if the entire benefit is passed on by the insurance companies, could get cheaper by 18% because the GST goes from 18% to the exempt category. For life insurance, the ULIP policy and the term policy, again, the premiums can come down by 18% if entire benefits are passed. Endowment policies could become cheaper by 4.5% because that's the GST rate there. And single premium annuity policy could become cheaper by about 1.8% because that is the GST rate which applies there. What happens to insurance companies? Well, the inference or the conclusion is that the cost for insurance companies on every policy is expected to go up. Why? First of all, input tax credit. To acquire a 100 rupees premium, insurance companies spend about 70 rupees as expense. Earlier, which is the current regime, they could take 18% GST input tax credit on that 70 rupees of expense, which won't happen now, and the ability of the insurer to offset that cost goes away. The second reason why the cost would go up for the insurer is no benefits of the inverted duty structure. Only reinsurance get exempted, which is just 1/3 of the total cost. 2/3 is still commission cost as well as claims cost, which still remain. And hence, that cost could come onto the books of the insurance company, both health insurance and life insurance. And the numbers that we've worked out and we've spoken to experts suggest that health insurance policies, the cost could increase for the insurer by about 5 to 7%. Life insurance policy, the cost could increase to the insurer by about 9 to 11%. There are 3 scenarios which pan out after that. Either that entire hit on health insurance of 5 to 7% and 9 to 11% for life insurance could come on the books of the insurer. Second thing, the cost could be shared between the distributor, someone like a Policy Bazaar, and the insurance company. And the third and the final scenario is that benefits could be curtailed. Some part of the benefits could be curtailed for the policyholder and some part of the benefit could be passed.
Well, that's exhaustive. Yash, thank you very much for that. And for a more detailed explanation, Yash, you're explaining it in detail on digital, right? On the digital platforms.
That's correct. I'm just ready to do that. So very soon you'll be able to find a detailed explanation on this entire math on the digital platforms of CNBC TV18.
Okay. Well, be sure to check it out. Thanks very much, Yash, for that. Listen to some opinion we got.